everyone, and welcome to podcast with Life Goals Heroes. I'm your host Shailesh Kelkar, and today we have a truly special guest joining us, Indraanil Guha. Indraanil is the co-founder of MetaCaps.ai, a Mumbai-based leading robo-advisory platform that offers a range of sophisticated quant-based investment strategies to both the retail as well as HNI clients. Prior to starting MetaCaps.ai, Indraanil was a part of Accenture's management consulting practice. His primary objective and focus was banking and financial services, where he had the opportunity of providing his experience, insights and advisories to some of the largest companies in India's life insurance space and also the BFSI space. Indraanil earned his MBA from IIM Bangalore. Welcome Indraanil. Can you please share your experience about the financial industry and the growth opportunities for the next decade?
Hi Shailesh. I look at the financial services industry. The growth potential of the industry is basically a function of the amount of savings that we generate as a country. And by global standards, India's savings rate is fairly on the higher side. As a country, we generate about 30% of our GDP in terms of national savings. Now, on a GDP of about $3.5 trillion, if you apply a 30% savings rate, you're talking about $1 trillion worth of savings being generated by Indians every year. $1 trillion is almost about 90 lakh crores in current exchange rate, right? That's a very large number. However, it's common knowledge that the vast majority of this is actually going into what are called hard traditional assets like real estate, gold and stuff like that. Barely about 25% is coming into financial assets. Now 25% of $1 trillion, that also translates to about 22 to 23 lakh crores. That's still a very, very large number, right? Unfortunately, of this pie also, which is coming into financial assets, the vast majority is actually going into stuff like bank fixed deposits. Only a very tiny fraction of even this pie is going into what are market-linked instruments, which have traditionally been able to produce inflation-beating returns on a consistent basis. The share of those instruments is still in the range of 10 to 15%. So growing very fast, but still a very small part of the overall amount of flows that is coming into financial assets. So there's a huge amount of growth potential ahead of us as an industry.
So thanks Indraanil. You mentioned about the growth of life insurance industry in the last 10 years, which is, you also joined life insurance industry and now you are one of the top distributors of life insurance. So how has been your journey in the last 3-4 years that you have been in the LI industry?
I actually come from a management consulting background. So I'm not really from a fund management background. By training, I'm a MBA in finance, and then I worked for a bunch of BFSI companies. I used to consult for them. And then I started this robo-advisory platform that I run right now about 7 years back in 2017. As part of MetaCaps.ai, we offer a range of very sophisticated quant-based models to our clients who are primarily retail customers as well as HNIs. The primary factor that we try to track is global liquidity. So in our view, whenever global liquidity conditions are easy, those are times when asset classes like equity have traditionally done very well. Whenever liquidity conditions become tighter, those are times when equities tend to underperform and fixed income does well. So based on our view of how global liquidity is shaping up, we basically keep rebalancing our client portfolios between various asset classes. And that's our primary proposition. And in this backdrop, we started offering our strategies with ULIPs and life insurance products as the underlying instrument about a couple of years back, because ULIPs are really tax efficient while offering these kind of strategies to clients. because rebalancing becomes a lot more tax efficient than any other equity linked instrument if you have to sort of implement the kind of strategies that we offer to our clients.
So Indraanil, in your discussion you mentioned about ULIP, which is Unit Linked Life Insurance Plan. So what is this ULIP and how does it work?
So the way I look at ULIP is a very comprehensive investment cum insurance product which addresses both these needs. It addresses your need for investing, it addresses your insurance needs, right? So ULIP is a vehicle for you to pursue all your critical life goals, be it planning for your child's education, be it building a corpus to buy a house, or planning for your retirement. So you can plan your various critical life goals, but at the same time, there is a part of when you are investing in ULIP, you also get a very substantial insurance cover along with that, and this is equally important. Typically, in case of most ULIPs, whatever you invest in the ULIP annually, the ULIP will typically afford to you an insurance cover of your investment amount. So let's say if you are investing, let's say 5 lakh rupees per year into a ULIP scheme, you get a 50 lakh rupee insurance cover along with that, right? And this is very, very important because while you are pursuing your various financial goals, during this journey, if God forbid, if something happens to you, this insurance cover is the one which is going to ensure that the final outcome, the final financial goal for which you are trying to save up for, this is not in jeopardy. Your dependents will still have access to a substantial amount of fund which can address the financial goal for which you are trying to save up for using the ULIP investment.
Indraanil, you mentioned about the ULIP and the charges. I understand the new age ULIPs are far more competitive and there is a lot of transparencies as far as various charges are concerned. So can you throw more light into the charges compared to the earlier ULIP?
ULIPs have been around for a very long period of time. However, some of these traditional ULIPs, I would say, have suffered to a certain extent with very bad reputation because of charges being on the higher side. If the charges are high, obviously that has an adverse impact on the final return that accrues to the investor, and that's why ULIPs, some of these traditional ULIPs have not done a very good job in terms of generating very good returns for customers. But the good thing is that that's something that most of the leading ULIP companies have taken cognizance of, and they have restructured their product. And I would say in the last 2 to 3 years, most of the leading ULIP companies have come up with what I call a new breed of new age ULIPs, which I find to be far more transparent, far more efficient in terms of the value that they create for investors. So for example, you have NAVs of these funds that are published on an everyday basis, so you can track their performance on a daily basis. They are significantly lower in terms of charges that they levy on investors. So for example, the biggest bone of contention when it came to these traditional ULIPs used to be something called allocation charges. Now this is something that has been optimized to a very, very large extent. These new age ULIPs that you have right now have brought down allocation charges to the bare minimum. In some cases, allocation charges have been done away with completely. So whatever you invest, the entire amount basically without any deduction is going towards your investment. The second big chunk of deduction goes towards, as I mentioned to you a little while back, to pay for a insurance cover, right? Now against this you get a insurance cover to go along with your investment plan. The structuring of the product has been done in such a way that it induces the correct kind of behavior in you to stay invested for a sufficiently long period of time. Again, there is something called loyalty bonus. If you stay invested for a sufficiently long period, the ULIP company will top up your investment corpus with these so-called loyalty bonuses. Typically loyalty bonuses get added to your investment corpus at the end of 5 years, 10 years, 15 years. Again, the structuring and the purpose of these loyalty bonus is to induce the right kind of behavior amongst investors so that you consider staying invested for the long term. So I think this is the reason why I find these new age ULIPs to be particularly attractive, because they have optimized themselves very significantly on the cost front, and they are inducing the right kind of behavior amongst investors.
So every Indian customer who wants to invest into any of the asset classes, which is financial asset classes, he talks about the tax benefits. So what are the various tax benefits in ULIP products?
ULIP makes for a very, very differentiated proposition for customers because of the inherent tax benefits that they carry. First and very important tax benefit, any investment in ULIP up to an amount of 2.5 lakhs, your maturity amount is completely tax-free. This is a tax benefit that is exclusive to ULIP. This is the first benefit. Second is what is called Section 1010D. As per Section 1010D, in the unfortunate event of the death of the insured person, the entire death, the amount that you receive as part of your death claim is completely tax-free and in the hands of your nominee, right? During the course of your investment, any switching that you do between the ULIP funds, that is not a taxable event for the investor. As long as you are not redeeming the investment and getting the money back into your account, as long as you are just switching the money between funds, there are no exit loads, there are no long-term capital gains tax payable to the government, there are no short-term capital gains taxes payable to the government. So all these switches are free, and most top ULIP companies actually afford to you unlimited number of switches during the year. So these are broadly the three important tax benefits that you get when you invest in a ULIP scheme.
Thank you, Indraanil, for providing good insights on ULIP products to our customers. To our viewers, thank you so much for joining us.